Good morning and good afternoon to everyone who's just joined. We're going to get started here. My name is Zach Friedman. I'm a business development executive here in Ontario out of the Markham office. We have the privilege of being joined by Joe Bullock today from CPP Foresters. He's the regional vice president in Alberta. Again, before I put it over to Joe, he's going to be talking a little bit about Foresters Advantage Plus, participating whole life account. I'm going to dive deep into that and go through some case studies as well. So, Joe, over to you. Sorry, I said I wouldn't screw up your last name, and of course I did. So,
it's all good. Thanks, everybody. Good morning, I guess, to everyone out from the west, and good afternoon for those out east. I am located here in Edmonton. Yes, I'm an Oilers fan. No, I won't be fielding any questions today about the performance last night. So, for those that are hockey fans, a couple games left here, or I guess a few, hopefully, for the Oilers to try to get back in it. But as much as I want to spend an hour talking about hockey, we're here for a different reason, and we're going to talk about participating whole life. And the theme for today is also juvenile or children in recognition of International Children's Day in June. We wanted to try to keep the theme about children's insurance. So I did my best to focus some of these slides in the juvenile market, but of course there's going to be some stuff, for the juvenile market, but I have to talk about some of the adult pieces for this program too. And those that are familiar with Foresters, you know that we have a member benefit package as well that come with our plans, being a fraternal life insurance company. And what's wonderful about those member benefits is there's a lot of stuff that can be value add for families, parents and children. So I'm going to go through some of those too, because that's over and above the insurance that we'll talk about today, the Par Whole Life. There's this whole wonderful package beyond that really gets a lot of perks for that family market. All right, so just to start there, a little bit about who is Foresters. Hopefully you know who we are. Maybe you've used us before. Maybe this is an opportunity to have a look at what we do. But we are unique in the Canadian market. There's not very many insurance companies that are like Foresters Financial, and in that we are a fraternal life insurance company. And all essentially that means is when you purchase a policy with us, the life insured individual becomes automatically a member of Foresters. And that's really how we're structured. So we are not a publicly traded company or even a private company. We're a fraternal organization. And that provides us to do some unique things, or allows us to do some unique things where we're not really just all about profits for shareholders. We're about still generating profits, but we are a not-for-profit structure, which means that profitability that we do have, we're able to flow that back into the hands of our members, into our own communities, into the charities that our members want to work with. So it's a whole mission of doing good, making a positive impact in our communities in our own way. And if you can appreciate that message, and hopefully your clients can appreciate that message, it's a little bit more than just a straight life insurance solution. Of course, we offer those at the core of what we do, but there's so much more that goes into us as a company. And, I'm personally a member of Foresters for my own policy, and I've got young children. So a lot of this speaks to me, both as, as the employee of Foresters, but also as a member myself and my own family, and some of the things I've been able to do with the member benefits. And you can share that with your clients as well. So even if you haven't heard of us, we have been around for a long time, 150 years actually. This year, 2024 is the 150th anniversary of Foresters Financial. So I believe that's the second oldest in Canada. So we have been around here for a long time. And that's important because you want to make sure that the company that you're dealing with is going to be there, for those claims that are coming up, whenever that may be. And we've proven that we've done it for 150 years. Hopefully we'll be able to do it for the next 150 or 500 or whatever it is. I don't have a crystal ball to know what the next 500 years looks like, but we have built our company on stability, financial security, and we're going to be there when it matters most. And here's some numbers that back that up. The one that I'd like to focus on here is the LICAT ratio of almost 195%. So we do have very strong capital reserves, and that's by design to make sure that, if things go south quickly, we still have those reserves to carry us through. We're going to be there to pay out claims and take care of our liabilities. And that's really at the core of it. You want to know that the insurance company you're dealing with has those assets to make sure that they can pay or make good on all their debts. Okay, so let's talk about Advantage Plus. That's the name of our participating whole life insurance. And I am going to theme this a little bit into the children's market, but of course, this can be a juvenile plan or an adult plan. So just to talk about whole life at a high level, some of this might be, very basic, but we're going to go through it. And it's things that keep in mind when you're sharing this information with a client, because of course you as an advisor will easily understand a lot of these things, but sometimes a client really has no idea anything about life insurance. And so you are their first discussion they've ever had to understand what is life insurance, what's the difference between a permanent policy, a whole life policy, and a term policy, and a UL, and they're looking for you for that information. So one of the keys, of course, with participating or whole life insurance in general is the word guaranteed. And we know the word guaranteed means it's locked in. So we are guaranteeing the premium that the client is going to pay. And we have limited pay options as well. So if they want to pay it for 20 years and be completely paid up, that's available. Guaranteed death benefits, of course, that's a big one. You want to make sure that the coverage that you have is guaranteed. We have guaranteed cash values. So even at I'll call those worst case scenario guaranteed cash values. That's if there was no dividend performance, nothing was achieved from extra performance, you still have locked in guaranteed values that are available. Guaranteed non-forfeiture values, those are what I would consider a safety net. So if the client maybe can no longer afford to pay premiums somewhere along the way, they still have some options for some reduced amount of coverage that they're guaranteed for them. And of course, there's guaranteed loan provisions. So one of the benefits of a whole life contract is it generates those cash values, and you can access those cash values typically in the form of a loan. There's guaranteed loan provisions for that. And we also have access to third-party lenders, collateral loans, and using the insurance contract as a backup for that. But anyway, getting to the core of it, this is a product you can provide to somebody that they're looking for security, comfort, stability. They don't really have to mess around with how the investments are managed. It's taken care of for them. They just need to pay the premium and know they've got that guaranteed locked in. This is a good solution for that. So just to get into, again, this conversation about whole life, universal life, these two are, of course, the main two products of the permanent life insurance landscape, and they sort of go back and forth in popularity. For a long time, whole life was the only product available. And then I don't know, a little bit before my time, but I think it was in the late 80s, maybe early 90s when universal life was introduced and gained a lot of popularity with where the interest rates were and how the markets were doing. And then it's kind of been a back and forth, for popularity of these products. In my mind, there's no right or wrong answer here. It's two products that can deliver, similar or different types of solutions for whatever the client is interested in. And right now we've seen a resurgence in whole life that offers a little bit more of that comfort and stability that clients may be looking for. And who knows, maybe in the next few years it flip-flops again. But we sell at Foresters, we sell a whole life product. That's what today is going to be about, is our participating whole life. But to give you a sense of who's an ideal client for these types of products, these are some quick hits. So just keep this in mind when you're having discussions with maybe that family market client and trying to understand who they are, what they're looking for. Whole life is going to be a good fit for somebody that, they're really not interested in doing regular ongoing performance investment reviews. They don't want to have to make decisions on the management of the funds that they're invested in within their insurance contract. They're more concerned about the certainty of the death benefit, the premium that they're going to pay. They want to know how much they're paying. They want to know how much coverage they've got, and then they're happy. If they're doing investing, they're going to do it in separate vehicles. So, maybe a RSP or a TFSA or something of that nature. That's where they'll do their investments. They prefer to keep their insurance investments separate in that sense. UL, on the other hand, would be somebody that is comfortable with investments. They do understand them. They do understand there is market volatility. Things can look really good, go up. Things can also go down. And if that happens, they have to, maybe make additional deposits if things go off the rails a little bit. So someone who's comfortable with that would be a good fit for UL. We're going to focus on a client that may be more suited for something that they don't have to do that, week to week, month to month, year to year management of the contract. They're just paying for it. As long as they pay the premiums, they have the coverage, it's guaranteed, with that opportunity for additional growth, of course, that comes with the dividends. which I'll get into in a moment. So Foresters Advantage Plus is a fully underwritten participating whole life product. And here's some of those things that we do offer for clients, whether it's a child client or a parent looking for insurance. These are the things we can offer. So of course, lifetime insurance protection. I should mention that we do, if you're looking at our enhanced dividend, which I will talk about a little bit later, we do have a lifetime guarantee on our enhanced dividend as well. And our other dividend options are guaranteed. Fixed premiums, of course. So we have a few different options there, but they is fixed, and whatever we set up as the initial premium, that's what they're going to be paying for the duration of the contract or the limited pay structure. Tax-free death benefit, cash value accumulation, and then the big one, the opportunity to earn dividends. So at a core, you have the guaranteed base plan of coverage and premium. But the wonderful thing about participating whole life is it earns dividends from the PAR account, and those dividends can then be used to do different things. Generally speaking, you would use the dividend to purchase additional units of insurance, which will grow the policy. And we have two main dividend options that we look at that I'll explore. And there are actually a total of 5, but we focus on 2 of them that I'll talk about in a few slides. All right, so I've sort of talked about all these things. You know, we do have a solid history of dividend performance as Foresters Financial, going back many years of paying consistently a dividend. We can never guarantee the dividend, but we do have a track record of continually paying a dividend. You know, the actual dividend amount can fluctuate year to year, but there is that track record of continually paying it out. Premiums is something that we've really focused on, especially this year. And actually very recently, within the last couple of weeks, we did an adjustment to our product here, specifically on the enhanced dividend, to offer extremely competitive premium. So if you're interested in premium affordability, you know, stay tuned for the next hour because we'll get into that. Built-in benefits, that's another wonderful thing. It doesn't cost additional premium, but we have a number of built-in benefits to the core contract. And on top of all of that, I have some slides at the end about the member benefits. So that's unique to Foresters. Not only to get the insurance coverage, you're offering an opportunity for the client to get access to a pretty broad range of additional benefits at no extra premium, just part of the deal that we offer. Definitely appealing to that family market. If they have young children, there's going to be a lot of things they can use out of the member benefit package that will really provide some value for the family. Okay, so this might not be news to you, so you might not be extremely familiar with PAR whole life, but we're going to go through a couple slides here. Maybe if you are a universal life, you know, if that's what you gravitate towards, maybe you haven't used PAR whole life, it might be interesting for you, but this is essentially a really quick high level of how a participating whole life policy works, which is you get a dividend or an opportunity to earn that dividend. And the dividend is calculated by being a portion of the premiums for the policy for those PAR account holders. We call it certificates or policies. Their portion of those premiums go into the PAR account. So a big pool of money that everybody's paying their premiums into. We do, by design, invest those into stable fixed income investments primarily, because the whole point of a PAR whole life contract is to have long-term stability. We know there's going to be claims that pay out, and the whole thing has to keep afloat in the long haul for years and years. And so you have to have stable investments to make sure that that's going to perform as expected. And then each year, a portion of the earnings of the participant account are redistributed back to those certificate owners, and that's called the dividend. So this doesn't get into the specific breakdown. This is, of course, a very high level look at the asset mix. You know, underneath the category, if you look at the 78% that's in the fixed incomes, there is a breakdown there between, you know, public bonds, corporate bonds, that type of thing. And we've over the last couple of years really revamped that to be cutting edge in terms of the asset mix that we're now working with in our fund. And then, of course, there's still an equity component there to offer that additional rate of return. But it's a nice mix to make sure there's some upside performance, but also locking in that stability that you can rely on a consistent dividend moving forward through time. And so this is a quick look at the dividend performance over the last 20 years or so. It's currently at 5.5%. But the whole point here is if you're comparing this to maybe a whole life, or sorry, a universal life where there's volatility, you could have a really strong year and then a negative year, and that's a pretty bumpy ride, like a roller coaster. This is more like a train track. You're going around, you're not seeing a lot of ups and downs. You're looking for that stability and consistency in the dividend performance, which we continue to pay out every year. Okay, so we know these policies earn dividends. Then the question is, what do you do with the dividend that the policy earns? And the answer is you can do one of 5 things. And we've ordered these into maybe the most common options that we see. So here at Foresters, we do focus and we do sell a lot of the enhanced insurance option. You may not be familiar with the enhanced insurance, but I'll break that down a little bit. At a high level, enhanced insurance is designed for affordability or maximizing coverage for the certain premium dollar you've committed. So by design, it's a more affordable product offering or plan design. And paid up additions is the traditional participating whole life dividend selection, where the dividend is used to purchase additional units of insurance and grow the policy. So that's wonderful for things like inflation protection, making sure the death benefit is growing over time. Then there's 3 other options. I won't get into too much detail, but we do allow premium reduction. That can fit for specific situations if the client is looking at total cumulative premiums paid over, let's say, a 10 or a 20 pay period. The premium reduction option can look attractive there. You can maybe pay the lowest amount in total premiums using that option, but you're sacrificing some of the use of the dividends for growing the policy. But I have seen some cases where that comes in and it aligns really well with the client's need, and it makes a lot of sense. The bottom 2, we don't see chosen too much. The cash payment, which is basically just, they get a check in the mail for the dividend in pure cash. And then dividends on deposit would be basically the dividend gets deposited into this account where it earns some interest. So not, in my mind, maybe not the best use of the dividend, because they can do other better things with it, but definitely speak, from our perspective, we sell or we concentrate on the enhanced insurance and the paid up additions as the dividend choices. All right, so let's dig into the enhanced insurance option. I mentioned just a little bit ago, this is one of our plan designs that we just 2 weeks ago made a tweak to this to make this even more appealing from a price perspective. So what is enhanced insurance? The easiest way to explain this, it's a combination of paid up additions and 1-year term insurance, which is the enhancement. So if you see the word enhancement, it basically means 1-year term insurance. And so let's say the client is purchasing $100,000 of death benefit. Of that $100,000 that they're purchasing, it'll be a combination of a base amount of whole life. And I'm just going to use easy math here. Let's say it's $50,000 of base whole life. The other $50,000 is the 1-year term insurance or the enhancement. So combine those together, you get the coverage amount that's guaranteed. And what happens here is as the dividend gets earned, it still purchases paid up additional units of insurance. So it buys those whole life units, but it's like an automatic term conversion. So every year, the amount of those paid up units you're able to purchase with the dividend replace the 1-year term insurance. So if you're able to purchase $1,000 of paid up units, you can take those $1,000 of paid up units and replace the $1,000 of 1-year term that you had. And that is a process that will continue to happen year after year until all of that term enhancement has been replaced and you're now back to a full amount of whole life, which is called the crossover point. And then from that point forward, all of the dividends buying paid up units will be added to the death benefit. So the death benefit on here is going to be delayed, or the growth in the death benefit is going to be delayed as the enhancement has been replaced with those units that you're purchasing. But the flip side of that is the price point here is very appealing. So if we go back to maybe a family market, people that have kids, they're on a budget, this is a really appealing solution because it fits with a lot of people that have affordability as part of their decision making. They're looking for something that has a price point that makes sense to them, and this is something we can offer for those clients. So if you haven't looked at this before, I know this is sort of the second option a lot of people look at. Paid up additions is traditionally the main dividend selection. You will notice quite a significant difference in the premium. And Foresters Financial specifically, we're the lowest price in the market for this option. So if premium affordability is where your mind is at, or the client you're speaking to, I would highly encourage you to reach out to us. We can help you run some quotes, or go into our software, run some quotes, and you'll be, I believe, pleasantly surprised with the price point that you can get on this enhanced insurance dividend. All right, a little bit more plan specifics. We have a paid age 100, so that can be for juvenile plans or for adults 18 through 85. And then we have the 10 and 20 pay options. We have a particular sweet spot on 20 pays, whether it's a juvenile that works really well with the juvenile market, or older individuals, adults as well. The 20 pay seems to be the one that is a nice sweet spot between price affordability and being paid up after 20 years. You're not locked into a long-term payment schedule. So 20 pay is one that makes sense. 10 pay, it's the same idea, but it's compressed into 10 years. And so sometimes that just means the cash flow is higher. So it would make sense for people that have that budget to play with, but 20 pay is that nice little sweet spot we find in a lot of our plan designs. The issue limits, 25,000 is the minimum amount on our basic insurance. And you can, whether it's the base plan plus term riders as an example, up to $1 million would be no paramed or lab work required up to the age of 50. If you're 51 through 55, that's up to 500,000 before that would be triggered. And this quoting software can go up to 5 million in terms of our basic quoting software. We can go up to 25 million in total size, but amounts over that 5 million mark go to our special quotes team. So you can reach out to our team if we're working on a large case, and we can engage with our special quotes process for any of those larger cases. Rate banding. So if you're familiar with rate banding, it essentially means each time you go up a band in these ranges here, you have a lower cost per thousand of insurance. So you kind of get a discount, a volume discount for higher amounts. So our bands are 25 to 100,000 as band 1, band 2 starting 101, $100,001 up to 250, and so on. What I love about our software is if you start to approach that next rate band and you type in a quote and you press on the illustration, if it recognizes that you can actually up to the next rate band, it'll tell you that, saying, hey, you know what, if you up this to a little bit extra coverage, we can actually lower your premium down. So the software will identify that if you're getting close to the next rate band, you might actually get a better price by increasing the amount of coverage, which is a little counterintuitive, but that's because of the rate banding in place. So the software will help you with that. You can tell the client, hey, we can actually get you a higher amount of coverage for less cost. And that's always a good discussion to have. Okay, so I added a couple slides here about juvenile plans in spirit of the International Children's Day. And I actually used myself for this slide because this is me. I'm a parent. I have a 7-year-old son and a 4-year-old daughter. And so we have this plan, the Par Whole Life. And when you're doing it on a juvenile, a lot of discussion, if you're in that family market, affordability is part of that. So the clients might have a budget, especially if they have multiple children. If you have 2, 3, 4, 5 children and you're looking to put on a policy on each of them, how much do you have in your budget to spend? Can you spend, $100 a child? Now times that by 4 and you're at $400 a month right there. It can start to add up with multiple children if you're trying to put a plan on each of them. So this is just an example. And why I put this example together is just to give you an idea of the two options that we talked about, which is paid up additions and the enhanced insurance. And I just kept $50 a month as the example for the budget that they had for each child. And this just shows you how much of death benefit you can purchase using paid up additions versus the enhanced insurance. So for my son, my 7-year-old male, it's $32,000 using the paid up additions, which of course will start to grow with the dividends and grow over time. Or the enhanced insurance right out of the gate have a guaranteed death benefit of more than double that of $73,000, and even more significant on female with the way the pricing works. $35,000 for paid up additions, or you can guarantee lock in $92,000 with the enhancement. And we have that lifetime guarantee on the enhancement. So that's the guaranteed death benefit right out of the gate. So it just shows you if you're looking for maximizing coverage for a premium dollar, the enhanced insurance could be an interesting look at this. But this is a great conversation you can have with a client. The option A, of course, is going to offer the paid up additions, and you'll see that death benefit growing, but it will take a number of years for the paid up additions to grow just to match, to catch up to the starting amount of coverage that the enhanced offers. So again, no right or wrong answer here, but I just want to plant a thought in your mind of run a couple quotes, see what you can do with that budget, and then bring that to the client, have a discussion with them, and maybe they gravitate to option A, maybe they gravitate to option B, but you're presenting them a couple of different looks for the same, essentially the same overall structure plan, par whole life, but a couple ways to sort of slice it. All right. So this, especially with the recent announcement we made, you'll find Foresters in our enhanced participating whole life product very well priced in the marketplace. If you see the number 1 in these charts, that means it's the lowest price for this type of product in Canada. So pretty much across the board, we're the lowest price. This is on a 10-pay solution. We're not quite number 1 in that 25 age category, but other than that, pretty close to number 1 everywhere on the 10-pay. 20 pay across the board, number 1, basically all ages, all coverage amounts, we look really strong there. And same thing with the 100 pay. So I encourage you to run a quote. If pricing is part of that discussion, this is going to offer a really strong solution. It's lifetime guaranteed, plus the member benefits. We do have a really compelling pricing and offer for clients in this type of, let's call it budget conscious market. The other thing to note, this is sort of switching gears a little bit, and maybe not so much in the children's market. This would be more of an adult situation, but ratings. Anybody here love getting a rating? You know, you did all the hard work, you sent in the application, then there was an APS, and now it's a month or 2 later, and you're waiting for a solution or an answer. You get it back, and they get rated. And then you got to go back to the client and say, oh, I already sold this. Now I got to resell it at a higher price point, and it's never pleasant conversation. The good news is with this product, and particularly with the enhanced insurance plan design, ratings don't have as steep of an impact on the price as you might be expecting. And part of that is because the rating only applies on the basic amount of whole life. It doesn't apply on the enhancement. So you're applying a rating feature just to a portion of the actual overall coverage that they're getting, which means a less significant impact on the actual premium the client pays. So as an example, we've got a 35-year-old female. She's doing a 20-pay enhanced product for $100,000 of coverage. Standard price on that was $101 a month, very well priced. She gets rated at 200%. So your mind might automatically think a doubling of the cost at $200 a month. That's not how it plays out. When you run the quote, it's $112 a month at that 200% rating. So yes, it still goes up. You still have to have that conversation with the client, but hopefully a little bit of an easier conversation and a digestible premium increase for the client. I've got a couple other worse scenarios. These are 300% ratings. So you're getting into flirting with decline territory, but still approvable at a 300% rating. And even at 300%, the price increase, the premium increase is maybe not as significant as you might be expecting. So 45-year-old male for 100,000 20 pay. Standard pricing is 165. It goes to 196 a month at that. Or for a female, 142, 300% rating goes to 164. So again, yes, there's an increase. There's no avoiding that, but still hopefully a digestible increase that you can still have the client accept and take that offer. So a little bit of a silver lining there. Just keep that in mind. We do have a nice little, I don't know if you call this a sweet spot, but it is something that really works to the client's advantage if they're not in, you know, perfect standard health, and not everybody is. You know, not everybody can get a standard rate, and we can still offer affordable pricing for rated clients. All right, so I just wanted to share with you an idea that you can also do with participating whole life, and even with the enhanced insurance. You know, this works, of course, with paid up additions, but you can still do this type of planning with the enhanced insurance option. So we've got a male, he's 50 years old, and he's doing it as a 10-play plan design because he wants to pay for the premiums in his working years before he retires at 65. So this will be a little bit of a larger case. He's doing 500,000, and you do the split. That's 312,000 of the base amount of whole life and 182,000 of the enhancement. The monthly premium for that is let's call it $1,600 a month. What he wants to use this policy for is not only the insurance coverage, but he also wants to supplement his retirement through a collateral loan. And we have an agreement, a partnership with Equitable Bank, where we can use them, or the client can use them to obtain collateral loan using their life insurance. Okay, so the client retires at age 65. He's able to access a $18,000 loan per year through this collateral loan, and that helps supplement those retirement years well, basically from 65 up until he passes away at age 85. So you do the math on all of that. He's paid $200,000 of insurance premiums into the policy. He took out $360,000 of loans out of the policy through those $18,000 per year payments. After it's all said and done, the loan gets cleared off from the death benefit, and there's still a remaining death benefit there of $165,000 to his estate. So if you look at the premiums he paid in versus the money he got out as a loan and still a estate value there, pretty solid deal for the client. It achieved both his need for supplementing his retirement income, but also having some benefit left over for his beneficiaries or estate for that purpose too. So even under the enhanced plan design, you can still do some of this planning and accessing the cash value through a loan. As I mentioned, we use Equitable Bank as a partner for this. So they have something called a cash surrender value line of credit, and you can basically borrow using your Foresters policy as the collateral for that. We do have some additional information. We have some couple of consumer brochures on this, or you can reach out to us for some more info. Okay, so those were some of the product features, but I also want to talk about some of the built-in features, starting with a couple things that are themed towards children. The first one is called the Children's Insurance Benefit. So this is not actually a child's policy. This would be a policy that the parent is purchasing. It's on the parent's life, but this is automatically included. So if the parents are between 18 and 55, those are the issue ages, $3,000 of convertible term life insurance is provided for each of the insured's children as long as they're 15 days old up to the age of 18 when the policy is issued. So all of the children are eligible with regardless of their actual insurability. So if you have uninsurable children, they are still automatically covered under this benefit for free, no additional premiums. We just can provide this coverage for those families. The coverage stays in effect until they hit the age of 25. And at that time, they have the right to convert that 3,000 plus an additional 7. So a total of 10,000, they can convert to a permanent policy for that child without evidence. So if you are looking for a way to offer some coverage on a child that's otherwise considered uninsurable due to a childhood condition, this is a way that the parent buys a plan. We can automatically cover those children. And by the way, if both parents purchase a policy, you can double those numbers. So it'd be $6,000 of coverage on the kids with a $20,000 conversion rate without any evidence of insurability. So a nice little feature here. It does help aid those discussions when you're really running into a situation where you really can't offer anything for that child. Unfortunately, this is a way that you can get some coverage in place on them with still a conversion opportunity to get them that coverage down the road. What I also love about this is if they convert their policy down the road when they're an adult at that point, now they're going to be a lifetime Foresters member. They're going to have access to those member benefits. The children I'm talking about, they're going to be now a lifetime Foresters member and continue with all that extra value of the member benefit package beyond their insurance.
Yeah, sorry, you might be getting to it. The conversion, it has to be done before the age 25 for the child?
Yeah, I would have to look at the specific wording, but it happens at age 25. And I think there's a specific window of I think it's 60 days or something like that. I'll have to look at the specifics, but at age 25 is when that conversion privilege kicks in.
Okay, awesome. And then, sorry, just one other one here. Is there any limit for the amount of children on that policy?
No, yeah, no limit to the number of kids. So they have 12 kids. They're all covered under this, even if they're not insurable. Yeah, it's a great feature for that.
Okay, sounds good. That was it for now. Thanks, Joe.
Perfect. Okay, so yeah, the doubling here that you see is if both parents purchase a policy, the husband and the wife together, they both have their own individual policy. It's now $6,000 of coverage on the kids with that $20,000 conversion rate. Now, if you're doing a child's policy, now you're doing a juvenile plan. So the actual insured individual is a child, under the age of 18. We have this built-in guaranteed insurability benefit. So there's no cost to this. It's built in. And it allows them the regular option dates of it, age 25, 28, and 31 plus special dates, which I listed there, things like marriage, birth of a child, a home purchase, or post-secondary graduation. Those are special option dates where they have the right to purchase additional insurance, up to 25,000 in each one of those dates, up to a total max of 100,000. So that's built in automatically. At the bottom point, I just added that on the slide where we also have a optional guaranteed insurance rider, which is an optional rider. So one of these, the one is built in, and then there's an optional rider to basically, beef it up a little bit, supplement it. Which the optional rider provides a few additional option dates, and offers an additional opportunity to have more overall coverage. So this is great to protect the children's insurability long term. If they're good health now, awesome. We never know what's going to happen over the next 20 years for kids. Hopefully nothing. You never use this, or you can still use it. But for those that maybe have some challenges down the road qualifying, they have this built-in conversion opportunity without any evidence of insurability to purchase that additional insurance down the road. So one of them is automatically built into the product. The other one is an optional rider to beef it up, to give some more option dates and additional coverage opportunities. Now let's switch gears back, because of, the quit smoking incentive, I really hope is not part of a juvenile plan discussion, but this is, again, back to more of an adult situation. We have something called a quit smoking incentive. So this is a huge opportunity for the smoking client market. If you have clients that are smokers and they're looking for permanent life insurance, this is going to be one of the best options they can find in Canada. And the reason is we offer clients that are smokers, we charge them or classify them as a non-smoker for the first 2 policy years. So they're a smoker, we know that, but we're going to charge them as a non-smoker for 2 years. Now, if they actually quit, if this encouraged them to quit, and they can submit a declaration and pass a urine test that proves that by the 2nd policy anniversary, they get to keep that rate going now for the policy. If they don't quit, they weren't able to quit, well, starting in the 3rd year, we're going to bump them back to what the smoker rate should have been, and they'll start paying the smoker rate starting in year 3. They don't have to pay back any of that discount or anything. They earn the discount. They just get that. But if they didn't quit, well, after 2 years, you say, okay, well, you weren't able to quit, so you're going to start paying the rates for a smoker now in year 3 and beyond. But again, if you're doing a 20 pay or a 10 pay plan design, you're looking at 10 to 20% of those premiums, total premiums, at a discount. So you can actually add up quite a bit of savings. And would the client rather keep that money in their pocket or give it to the insurance company? If you ask 10 people, I would say 9.5 people are going to say I'd prefer to keep that money. Maybe half a person would think they want to give it to the insurance company. I won't get through all the math on here, but basically what it's showing you is, you get a savings for the smoking client. So they just save money straight up into their pocket by just the feature of this policy. So and by the way, the software will do this for you. So you still indicate in the software they're a smoker, but by the design of the plan, it's going to just give them that rate automatically for the first 2 years. And the illustration will assume they go back to a smoker rate starting in year 3. So if you look at the illustration, the first 2 years, you'll see the discount. And then the 3rd year, you're going to see the smoker rate. But in reality, if they were able to quit, and by quitting, I mean they have to be a non-smoker for at least 12 months by the time the 2nd policy anniversary rolls around. So they have kind of a year to kick the habit, and they have to stay 12 months free of tobacco and nicotine to then earn that non-smoker rate moving forward. So just if they want to save for the first 2 years, that money is in their pocket. If it encouraged them to quit and they actually did quit smoking or are now a non-smoker, that's thousands of dollars in premium savings they're going to have otherwise that they wouldn't have. So trying to encourage people to quit, but even if they don't, there's money there to be saved.
A couple of questions that came in on the smoking aspect. Just want to make sure we're clear. So if they do in fact quit smoking for that 12-month period, are you saying we backdate it for at the time of the application, or is it?
So there are, so they already right from day one, they're receiving the discount. So they're paying the non-smoker rate from day one.
Right.
So by that 2nd policy anniversary, if they did quit and they proved it, they just keep paying that rate. Nothing changes. They're paying that rate they're already paying, which is the non-smoker rate. It's their premium will change if they didn't quit. Then it will change to go higher to the smoker rate at that time if they didn't quit. But if they quit, then they stay paying what they've already been paying.
And it's based on that age after 2 years is what the smoking rates will be based off of?
Yeah, at the initial, yeah, the initial age or the issuing age, that's what the rates would. It kind
Okay.
of goes back to what that would be. And you can actually, you know what? Maybe I can just take a quick timeout and go into the software here, and I'll just kind of give you a quick example to show this in action. So,
Yeah, I think that'd be awesome. I mean, it's a great initiative. It gives them a couple extra years to quit smoking. I think we just want to be clear
okay,
on
so
those.
okay, so I'm doing a 40-year-old male non-smoker right now, and it's for a non-smoker. So this is non-smoker. And I'm doing a 20 pay. It's 232 a month, paid up edition. So that's what I'm designing. If I switch it to smoker rates, you notice the premium didn't change. It says 232.83. So that's what they pay for the first 2 years. It didn't
Got it.
change the premium. However, it even tells you here, starting in the third year, if you don't quit, this is what it's going to go to. It's going to go to 279.
Perfect.
If they did quit, they get to keep paying that 232. But so it just kind of depends on what happens in the future for them. But they get this for 2 years. And I'll just really show you quickly here. Oh, here's the in action, the rate band. It actually says, bump it up by $1 and you get a discount. I'll ignore that for now. So in the software, if I just scroll down here, you're going to see there's the discounted premium for 2 years. And then it automatically assumes they didn't quit. And that's what it's going to jump to. But if they did, they get to keep paying the $27.93. Okay, the charity benefit. So this is an awesome benefit. Again, no cost to this, but we offer the client an opportunity to support their favorite charity just through a built-in feature of the policy. So let's actually go to this slide. This is better. So what happens here is this is automatically included, but 1%, and I should say an additional 1%. So it's not taken out of the beneficiary share. This is an additional 1% of the base amount of life insurance. So if it's paid up additions, it would be the whole coverage amount. If it's an enhanced plan design, it would be on the base whole life portion of that. But 1% of that, they can name a charity of their own choosing, as long as they're registered with the charity's registered with the CRA. They can name whatever charity they want to be the beneficiary of that 1%. So when they pass away, their family or the beneficiaries will receive the regular death benefit. The charity that they donate to will receive a donation made in the client's name for that 1% amount. And the donation is made in the client's name, and the value of that is that the charity will typically trigger a charitable tax receipt for that donation, and it's in the client's name. So when you're doing your final return, you get a charitable tax receipt for that donation from your insurance policy to help offset some estate taxes. So just a feel-good story. They get to support whoever they want, whatever charity they want to choose, and for free. And by the way, this particular benefit is also on the Foresters term insurance. So if you're doing a standalone term policy, this also applies. And the reason I mention that is sometimes you can get to higher face amounts when you're dealing with term. So if you had like $1 million term, that's a $10,000 donation. If it was a $5 million term policy, you're looking at a $50,000 donation, and up to the maximum of 100,000 would be the cap on this charity benefit. But really powerful. It's putting the client in control of who they're supporting here. They don't have to choose a charity. They could leave it blank and not. They do have to do something though before claim time. So whether they do it up front, you see it on the application, there's a little section here, or they can submit a beneficiary designation to us at some point while the policy is in force. Just has to be done before time of death. It can't be done after claim time. Okay, so I'm going to skip through. This gives you a really quick example. So here's a 47-year-old male. He's doing a $350,000 enhanced par whole life. So the base amount of that is $214,000. So it's 1% of the base amount when you're doing the enhanced. So that's $2,142 would go to the charity that he chooses here. So it's a nice way for somebody to do something good without having to do a whole lot of extra. You just get it as part of the package. Teladoc medical experts. This one is, again, provided at no additional premium. This is a super powerful benefit that hopefully the client will never have to use, but it's there if they do need to use it. So don't shy away from sharing this one with clients. I think it's if the time ever comes that you need to use this service, it's super handy to have. What I love about this as well, it's not just the insured individual, it's also applies to their spouse or partner and dependent children up to the age of 18. So the whole family unit has access to this. Typically, you see this type of product or this sort of thing on a CI policy, which we have it on our CI policy as well, but it is on our whole life here that we're dealing with. And there's a few different services here, but the main one is the expert medical opinion service, which is basically like having an expert doctor in your back pocket to give you a second opinion if you need it. So you're dealing with some sort of condition or issue. Maybe you've gone to local doctors, a family doctor or whatever, and they've given you a diagnosis and a treatment plan. You can access this service to maybe confirm the diagnosis and treatment based on their advice and expertise. And then maybe they're saying, yeah, you're on the perfect track. That's what I would recommend it. Or maybe they have an alternative to that that you want to explore. So it just gives you access to that service from a world-renowned expert in that field of medicine. So a really powerful tool. Hopefully your client never has to engage on these. That means they're in good health, but we know that's not always the case, and having these services available can come really powerful. And I always remember a story an advisor told me one time where they had a client that had this service on their policy and they were diagnosed with a terminal condition. But this service, talking to a world expert in that field of medicine, was able to add 2 years to the client's life. They lived 2 years beyond their expected life expectancy. And unfortunately still overall not a perfect ending, but they had 2 more years to spend with their family they probably otherwise wouldn't have because the doctor had suggested some things that really helped them out. So powerful. Don't forget about it. It's on the policy and there's no additional premium to it. Back to the children's theme, I want to talk about the children's term rider. This would be on a parent's policy. So the parent is the insured individual, but you can add a children's term rider here as long as the children are 15 days old to the age of 25. Premiums are for 20 years. It's anywhere from $10,000 to $30,000 of coverage in increments of $1,000. And it has a conversion privilege where they can convert the policy without evidence of insurability up to 10 times the amount, up to the max of $250,000. So it does, again, lock in some future insurability of the kids. So not so much a child's policy here. It's a parent's plan, but you're adding the children's term rider onto it to protect their insurability, anywhere from 10 to 30,000 of coverage with that conversion rate up to 10 times to a max of 250. And the premium on that is very reasonable. I won't get into all these details here, but there are some additional optional riders that you can explore. Term riders, of course, that you can add on if you're doing a base plan with some term. You can also do spousal term riders. My recommendation is spousal should be a separate policy. It's a lot cleaner that way, but if you want to have it all together, you can add spousal term riders to the base plan. There's accidental death, guaranteed insurability I mentioned earlier, waiver premium, APO. If you're trying to beef up the policy, you can do an APO on our paid up additions plan design. But I don't have time to go break all of these down, so I'm going to skip it a little bit because there's a couple of things I want to finish off here. I have about 10 minutes left. So this last slide is just talking about there is some real nice pricing affordability of doing a layered approach. So you have the whole life, you can have that premium effect of whole life with the enhanced as the base estate plan. And then you can add on term riders like a T30 or T20 for the mortgage deal or the child educational costs or support. But that is a really nice way to build a cost-effective approach, is a blend of the whole life base and term riders on top of that. I'm going to spend the next 10 minutes until we wrap up here just talking about some of the extra things you get with part of the Forester. So this is not policy specific. This would come on any Forester's policy, whether it's, and even CPP, by the way. So Canada Protection Plans also has these member benefits. Foresters, whether it's this product I'm talking about today or any of our products, this is all part of the deal as long as the coverage amount is $10,000 or more, which is 99.9% of everything. There's only one tiny way you can actually get less than that amount of coverage is through CPP. But so pretty much in everything. And the only thing the client has to do is purchase a policy with Foresters or CPP, and it's the life insured that becomes a member. Most of the time, the life insured and the owner is the same person. But if it's a different owner than the life insured, it's actually the life insured that is the member of Foresters. So what does that get you? All sorts of stuff. And there's, again, no cost. This is all complimentary. So there's scholarships, there's granting programs, there's a number of well-being benefits, and also a ton of community and volunteer opportunities that allow people a way to get engaged in their community and do some fulfilling things. So starting with scholarships, keeping with that family children's theme, we offer 2 types of scholarships. One's a competitive scholarship, and one's an Orphan scholarship. And we award millions of dollars every year to our members for an opportunity to go and further their schooling. And this is the power back to Foresters. How do we spend our profitability? It's giving it back to our members. One of those ways is through these scholarships. So the competitive scholarships is it's a $2,500 scholarship, and you can get that up to 4 times, so up to $10,000 of scholarship funding. This one is competitive, so you are competing with other Foresters members in that year that are applying for these. And the majority of the criteria is based on your community service. So the parents, if they've got kids that are going to post-secondary, in the 2 years leading up to when they're applying for the scholarship, so generally grade 11, grade 12, that's where they got to start getting themselves in gear, finding a local volunteer opportunity where they can get those hours into their resume. Minimum 200, but the more hours you can get, the better your chances are you're going to win these scholarships. And you have to be a decent student as well, 80% average. But yeah, great opportunity. I know advisors have told me their clients have won this, and they look like a hero to their clients, because not only did they do their insurance, but they gave that child an opportunity to go and further their schooling. And it's a powerful feeling, a little bit of a selfish feeling as an advisor, but pretty cool to say I helped not only get that family protected from an insurance perspective, but I also helped their kids get these scholarships. And so it feels really cool to do that. There's also an Orphan scholarship. So this one is not competitive. This is sort of a safety net feature where on the death of one or potentially both of the parents, they'll trigger this scholarship to give that family or those kids an opportunity to get a scholarship to continue with their schooling as well. So depending on what's happening there, if it was death of one parent, it's $1,500 a year for 4 years. If both parents pass away, it's $6,000 of funding for 4 years. And again, this is over and above any sort of insurance planning. This is an additional benefit, just part of the Foresters member benefits. If this situation occurred, that those children will have that additional funding available to them. There's also an Orphan benefit. And this one will really speak to the family market. If they have younger children and you're talking about their insurance planning, mention that this policy that they're getting has an Orphan benefit. And the way this works is if the parents pass away, so there's the children are now orphaned because the parents are no longer around, it will trigger this additional benefit. It's $900 per month per each child they have, will be paid out to the legal guardian to help raise and support those kids all the way up until the age of 18 for the most part. So using myself again as an example, I've got 2 young kids. My wife and I maybe get killed in a car accident. I don't know if I should say that, but let's say that scenario happened. My sister is the guardian for our children. So she would start receiving $1,800 a month every month up until the age of 18 for both of my children. And I know that money would go a long way to help my sister out, putting food on the table, getting them through sports and clothes, all those things. She's got this extra budget now she's got to deal with to raise my children, but it's helping them get through that. So really powerful. That's an additional benefit, again, over and above the insurance planning you did, the death benefit. There's an additional amount of funding there to help protect those families. Fun family events. They used to be called fun family events. Now they're called the Foresters Moments Grants. But these are activities that go on throughout the year that our members organize and other members can come out and participate in. So you as a member can apply for one of these grants and host the event. Other members can just participate. There's usually an email blast that goes out saying on such and such a date, we're doing one of these events. Click here to register for your tickets. Every member is invited, and they can get themselves plus 3 guests to come with them. So a total of 4 tickets per household can go attend these events up until all the tickets are gone. But Foresters pays for those tickets. So if it's a day at the movies, or maybe an amusement park or a sporting event, that members will organize these things throughout the year. I know here in Edmonton, there's members that do a number of these things, and you'll see on the calendar of activities, things going on. You just have to act fast to register quickly to get access to them, because they do sell out pretty quick, or the tickets go pretty quick because everybody loves free movies and things like that. But wonderful way for families to get even more value out of their insurance policy. You could tell a client, I'm selling you this insurance policy, protecting your family. Oh, and you might be able to go to the movies a couple times a year for free. Like, what are you talking about? And now you're into a conversation that's a little bit unique, a little different, get them excited about owning insurance in a different way. So really good for that family market, all these opportunities for the family to enjoy themselves just by having their insurance. Community grants, these ones are maybe not the fun activities. These are things to do, go make a difference in your local community. And so Foresters, as I mentioned, as a company, is all about giving back and helping communities, helping charities. And so our members have access to these grants where they can organize community volunteer grants, which is getting your hands on interactive in support of a charity in a certain way. For fun family grants, I just mentioned the Foresters Moments grants, and then there's a Foresters Care grant, which is a smaller micro grant of $200 you can do twice a year to go do an impact in your community. So the volunteer grants, I do have to blast through this pretty quick, but we'll go here. Volunteer grants is $2,000 grant. You can do this up to 2 times a year. These are some examples you see on the screen of things you can do with the money. It could be packaging hygiene kits and giving it to a local homeless shelter. It could be maybe there's a school kit for underprivileged children. You can pack supplies of school stuff and give it to a local charity or maybe a school that's in need of those. That sort of thing. You're doing some sort of hands-on activity to support a local community organization or not-for-profit or charity at the end of that. And you can do 2 of these as a member every year or apply for them every year. Yeah, these are the specifics. Whoops. So this is a lot to digest, right now, but if you want more specifics, we can certainly provide you with it. This is sort of the rules of how many per year you can apply for and all that sort of stuff. But we can help you through this. I've done a number of these myself personally, just as a member, and it's a great time for everybody that does them. And you also feel really good about yourself that you're doing something for your own community. So it's a feel-good story all around. And we give our members the opportunity to do this, either organize it or maybe just participate in what somebody else has organized. And the Foresters Care one, this is maybe the easiest one to do, but it's a $200 grant you can do twice a year. And it's just to do something positive in your local community. Maybe it's $200 for donating items to a food bank, or again, hygiene kits or school supplies. Maybe you want to spend $200 for some games for a local retirement community center or something like that. It's something to just share that good message, positivity in your own local way. All right, and I'm just going to wrap it up here because we're right at the top of the hour. I don't have the time to go through all of these, but these are the additional member benefits that you get on top of it. One of the big ones people always like to hear about is Law Assure, where you have access to creating a will, power of attorney, and healthcare directive, all for free. It's an online digital tool that you can use, and there's no cost to that. So any client that tells you, I don't have a will, well, they can get their will done at no cost through this. It's not designed to take care of every single will situation. More complex things, you probably still want to have a lawyer involved, but it's more straightforward type of estate. Get them to get their will done for free. So not only are you delivering them insurance protection, you're also getting their estate in order, and you can use this tool for that. All sorts of other wonderful things like lifelong learning is online digital learning, over 300 or 400 videos now of online content that's available 24/7. Foresters Go is a healthy living app. So you can download the app on your phone. It can track your exercise activities and all these different things. And the more that you do, you build up these reward points, and then you can spend those points in the store for whatever goodies you want. So I don't have time to dig into all of this, but this is all part of the deal. We can certainly share more information with you, but with that, maybe we'll wrap it up. And I know I'm at the top of the hour, so I don't know if we have time for questions, but thank you so much for allowing me to present to you and share a little bit about our product and what we do, and looking forward to working with you in the future.
That was awesome. Thanks, Joe. Lots of good stuff in there. I think if there's any follow-ups we could send to the attendees, that would be great. Maybe just a summary of the presentation. Had some questions we didn't get to, just kind of about eligibility of the member benefits and some of the other products. So would encourage some of the attendees to connect with their local wholesaling team to maybe go into more of that. But yeah, lots of good stuff from Joe and Forster. So appreciate the time today, Joe.
No problem. You're very welcome. Enjoy the rest of your day. And for those that are maybe converted Oilers fans, we need you on our bandwagon for a tough fight for the next little bit. But I'm hoping for the best.
Sounds good. Thanks for joining, everyone. Take care.
Thanks, everybody.